I'm Debbie Boiselle from Citizens Wealth Management inside Citizens National Bank, and I'm here today to talk to you about the economy and where we see the stock market and bond market headed for the rest of the year. We firmly believe that the economy is getting a little bit better. We do not see a protracted long recession, although there will be one depending on who you ask. We may already be there. We think inflation will get slightly better. However, we're struggling to see how the Federal Reserve can get inflation down to the 2% mandate. We're thinking that more along the lines of 3% is where it's going to be and where they're going to end up settling. With that said, we do believe that the economy and the market is going to do well for the rest of the year. We're going to have a few slow months and a few bumps in the road, absolutely. But we do believe that the stock market is going to broaden out. Right now it seems to be more in growth stocks. There are 7 stocks to be exact that have carried most of the upturn in the S&P 500. We believe that the rest of the S&P 500 should follow suit as the year progresses. We look for the Federal Reserve to do at least one more rate hike. It will probably come in September. Our best guess is that will be one and done. However, they have surprised us so far in the last year or so. So we can't be for sure, but we do believe we're getting closer to the end of the cycle than the beginning. With that said, we believe that the bond market is going to start to change the yield curve from being so steep where the interest rates are high on the short end and lower on the long end. And we'll start to see that level out. We think that interest rates will stay about where they are now. We don't look for them to decline anytime in the near future. We look to see that rates are more normalized, as we would say, where you're going to be able to get that 4 and 5% in the bond market. With the stock market, we like U.S. stocks. We like the large companies. And we like the corporate bond world as long as we're staying higher in credit quality. We also are starting to like international stocks. That's been a long time coming as we start to see them come out of their recession as well. We look to add probably some gold or precious metals to the portfolios. Nothing major, but to hedge against the inflation that we're seeing and to give us another asset class to try and get a return. So we're looking for probably another 5-6% on the stock market for the rest of the year, and then the bond market to average out right about where it is at the 4 and 5% return.